Welcome to This Week in Money. I'm Jim Goddard. Today, CIBC Wood Gundy's Ross Clark examines a very volatile week in the markets. David Gurwitz from Charles Ninner Research predicts a short-term rise but long-term slide on the trading floor. Marin Katusa reports from the New Orleans Investment Conference, while Chris Marchese checks in from the Spokane Silver Summit. We talk to Ross Clark right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600. Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark, investment advisor at CIBC Wood Gundy in Vancouver. Welcome to This Week in Money, Ross.
Always a pleasure to be with you.
Very, very interesting week in the markets. Let's take a look at stocks.
Well, what an interesting back-to-back pair of weeks here. I mean, a week ago, Thursday or Wednesday, the markets had just finished or in the midst of pretty much a free fall. Some stability a week ago Friday, and then by the time you finish this week, markets are not surprisingly up because they were oversold, but I think the magnitude of the move is clearly of significance here. And I would say my bottom line and the technical bottom line on this, I would say that this sharp move that we've had this week is it indicates that we have an important low in place, but we're likely to see strength maybe towards U.S. election around November the 4th, and then a bit of a correction after that into mid to late November. That's sort of the bottom line as I see it at this point. And next, other than chasing it on the short term, the next really good buying opportunity probably out there in the second half of November. So, just looking at the rationale behind that, the normal seasonal is that you get an autumn low in most years. We haven't had significant ones the last couple of years, but we finally got one this year. And when you do, it tends to evolve with two sell-offs, not just one. The first creates that high level of anxiety, and we saw that a week ago. I like to look at just some of my own oscillators that became oversold, but also some of the independent ones, like CNN has a great fear and greed index on their site, and that index got, on a scale of 0 to 100, it got down to 0 a week and a half ago. We haven't in the time that I've been watching that the last couple of years, never ever seen levels that have been under 5. And so to be down there really was just a sign of just short term, just how overdone we were. And it includes things such as VIX, which measures the premium on options. It looks at the put call ratio, how many people are buying puts versus calls. Looks at bond performance versus stock performance, the spread between high yield bonds and investment grade. And I know even on my own work, I got on the JNK, the high yield bond ETF, we got capitulation lows in there last week, and have had just a really good bounce back on that sector, to the point actually right now where we've gone from this deep oversold to now being mildly overbought, just in a span of 5 or 6 days. So, as I say, short term, very oversold and keep coming back. I would suggest that, don't look to chase it too quickly here. There will be secondary opportunities, and I'd be, looking out a few weeks for one of those windows.
What's going on with the Canadian dollar and the U.S. dollar?
The Canadian dollar bounced back with most items this week. Not big time. We're looking at Probably, as far as I'm concerned, a downtrend that's still in motion in the Canadian. We've rallied about 1.5 cents off, or maybe 2 cents off the lows at this point. There might be a little bit more left in it, but overall, this has been as much a function of what's been going on with the U.S. dollar than the Canadian. U.S. dollar had that fabulous 12-week run, petered out on the 3rd of the month, and the norm when you've had, now, first of all, we've never had a 12-week consecutive run. 9 has been the maximum before. But when you get that type of sign of strength, and then you go into this pause, which we're into right now, that pause usually takes 2 to 6 weeks to digest the gains. And I think you're seeing that in the dollar index, you're seeing that in the Canadian dollar, you're seeing it in the euro. If the U.S. dollar spends another, I would say, week to 10 days here without giving back much, then it's ready for its next leg to the upside, which in turn, means Canadian dollar comes under pressure.
How is the Canadian dollar held up against other currencies besides the U.S. dollar?
So the Canadian dollar against the euro, if we look at that, pretty much unchanged right now, about the middle of the range for the last 6 weeks, pretty much since the tail end of August. So you can see that the move down in the Canadian is really being reflected the same way against the euro. If we look at it against the Japanese yen, we're looking at a broader range there, probably about a 7% move overall, but in the middle once again of a 6 months range or a 6 week trading range.
Ross, what's going on with gold this week?
Well, gold, I look at this still as a movement against currencies as much as it is the bullion move itself. And the gold market continued to just trade in a choppy fashion in terms of U.S. dollars. We did get a bump up just short of 1260 as the U.S. dollar took its pause, and that pretty much what we were hoping for. You'd get up and correct back to the 20-week moving average. The 1260, 1280 range is where we had broken down from. So it was a natural overhead resistance level. And I've mentioned before that in terms of other currencies, we want to see if the Japanese start to become buyers or sellers, because their range for their gold price has been very, very tight. And once it starts to break out in terms of yen, that would be above roughly 135,000 or under 125 yen to the gold. And we're sitting at about 132 right now.
Ross, how can people contact you?
By email at ross.clark@cibc.ca or in Vancouver at 604-661-7759.
After the break, David Gurwitz from the Charles Nenner Research Center.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
My guest is David Gurwitz, Managing Director of Charles Nenner Research and also a first-time visitor to This Week in Money. Thanks a lot for being on the show.
Great, Jim. Nice to speak to you, and I'm a big fan of Canada. My parents met and married in Kitchener, Ontario, so I'm almost Canadian.
First of all, David, can you tell us about Charles Nenner and the Nenner Research Center?
Sure. Charles Nenner was at Goldman Sachs for 15 years, one of the top people in their research department, and I met him maybe 11 years ago, and I'm a sports person. I'm not a hockey player, but everything else. I played baseball, basketball, football, and was trained by a guy named Red Auerbach, who maybe you've heard of, was the guy that put the Boston Celtics together. So when I met him, I was a talent scout, having learned from a great guy, and I realized how smart Charles was, and he was at Goldman, and we then started our business together, and we're now one of the biggest research firms in the world. He came up with a system of predicting patterns while he was in medical school, when the professor said to him that people get admitted to insane asylums all around the world at the same time. And he couldn't believe it, and he started looking to patterns, and he was a natural pattern person. And led to him developing this system and explaining it to some computer people, and he predicts, and I get the honor of working with him and dealing with all the clients, moves in stocks, bonds, commodities, currencies, and economic indicators.
In other words, everything.
Everything. Well, the whole theory is there's one algorithm that covers everything that moves as long as we have enough data. So Facebook's not public that long. We can't really get yearly cycles. We barely can get monthly, so we can't do it. But if we have enough data, we can predict almost anything. Because the assumption is, here's the key, nothing's random. And therefore, everything that has happened in the past, if it's the patterns that had happened, I'll explain it in a second, we can predict what's happening going forward. It seems crazy, but it seems to work. He took everyone out of gold at the top. He took everyone out of Apple at the top. It's called interest rates down for the last 30 years, which is where they're going, and then he's calling them to be up for the next 30 years, starting in about 6 or 8 months. And he looks at the past, and if you take any data series and find top to tops and draw like a sine curve, like an EKG, and let's say IBM topped every 5 weeks, every 9, every 15, every 20. It has to be consistent, otherwise you can't predict. And when you overlay all of those together, and they're all topping next week, the 5-week cycle, the 9-week, the 14, in any data series, stocks, bonds, the TSX, gold, wheat, it's a top. We don't know why, but that's just how it works. And then level is another piece of the program, and he's able to predict levels of things. So cycles give you direction and timing, and levels give you levels. And when you combine those two, we're able to crazily predict most things that happen in the markets. And I recommend to your listeners to write to our site, charlesnenner.com, assuming they find this interesting, and get a free month of the research, which comes out 3 times a week and on Sunday, covering S&P, the VIX, and the TSX. We have lots of clients all over Canada, including Western Canada, your neck of the woods, which I've never been to, but I'd like to. And then we cover gold, silver, which we're going to talk about, nat gas and crude. We cover 5 currency crosses, the euro, the Aussie, the yen, and the Canadian, as well as the euro yen. And we cover bunds, German bonds, and we cover the grain, soybeans, wheat, and barley. And then a lot of stocks on Sunday. We called the top in IBM a month ago, didn't know what was going to happen. So we're pretty busy, but we've got thousands of clients all over the world. We do not manage money, which is really nice, because then we can just be brutally honest and say, do this, don't do this. Watch what we say next week.
And this is a free newsletter?
No, we charge. We charge.
But is there
the first month is free.
The first month is free. And how would someone sign up for it?
Well, they have to write to us, and they get a free look for a month. And then afterwards, myself or a bunch of other people are in touch with them to talk about the different options that we have.
David, it appears that your newsletter follows the markets almost in real time. How are you able to do that?
Well, we take ending data, end of day. So we could do intraday also. It's too much work. So we follow, our system takes data that, whatever the ending is, let's call it TSX. We just end of day, and we look at daily cycles, what happens on a daily basis, ending day data, ending time, weekly data, what happens every Friday, and then monthly data, and yearly data, and then decade data. So we look at cycles according to each time period, and then hopefully they all line up, and then if they're all bottoming, it's most likely a bottom. And like the TSX, for instance, we called it from 12,000 to 14 and change, got out to 13.5, went up to the 14 change again, and then it's on a sell signal now. Why? We have no idea, especially when it was composed of assets and companies that were gold and silver and mining that were going down. So why, if you had just used your head and said based on that the TSX should be down, why did it go up 2,000 points? And we don't know. We're not smart enough to figure that out. We just look at what happened in the past, and the TSX looked like it was going to go up, and it did. We also look at Elliott wave, candlesticks, other technical tools. Charles at Goldman Sachs, 15 years, so we're, this is pretty high-level stuff, but we decided years ago to make it available to individuals and corporations and traders, not just big hedge funds, which we have, and family offices, which we have, and a lot of retirees. And we have all types of people. I talk to people. I'm on Skype all day talking to people all over the world.
Taking a look at the equity markets in North America, do you have any projections over the next 6 months?
Yes. Funny you should ask. Well, we called this top at 2020, which was the futures level in the S&P. I'll use that as the number. And then we called a 10% correction and said there would be a slight bounce, but it's going to be sideways, we think, till Thanksgiving, and then a rally into the first quarter. Don't know exactly when yet. We don't know everything. We write what we know, and a lot of times we don't know, obviously. And then we think this next year is going to be a big V, a down move for a lot of the year, then comes back up, and over the next 6 years, which is your next question, hopefully, it is not going to be pretty. We do not think stocks. The last 6 years we've been up, and we've been on a buy signal for most of it. We cannot say the same thing for the next 6 years. Overall, it's going to be down. And then, the decade of the 20s will be tremendous for those who are in dollars, because that's a separate discussion we'll have, because we think the Dow will really go up a lot in the 20s after a 6-year overall decline the next 6 years.
So many people have been predicting the demise of the U.S. dollar. You don't sound like you are.
Well, no, we do. We are. Just we're not there yet. We've been calling the dollar strength until the first quarter of next year. So look what's happened. We've been right. Let me step back. The Canadian, if you remember, was 68 cents a dollar about 5 years ago. Jim, do you remember that period?
Oh, I remember it when it was 62.
Yeah. So the Aussie was also around 64 to the dollar. And this is 4 or 5 years ago. I don't remember exactly. And Charles put out a email saying, I know it sounds crazy, but both the Canadian and the Aussie are going to go to par. And not everybody agreed. And he was wrong. He went past par. Right? So he was right, obviously. But so we're pretty good with the currencies. We think the dollar will be strong until the first quarter and then be bad, and a lot of the currencies are going to be bad. The euro could go back to par. He called the euro was 151 before the first Greek crisis, if you remember. And at that point, it had run up from 122 to 151. He said, get out of 151. It went down to 122 and then 118. And surprisingly, it held its own since then. It's really kind of been stronger than most people thought. So he thinks the euro will eventually be one of the candidates to take over the dollar, because the dollar is being funded primarily by the Chinese, the shortfall we have in our government, whereas most of the Europeans are funding their own shortfalls and things. So he thinks at that point they'll be less of a mess than we are. It's not going to be pretty, but they'll be less of a mess.
Any chance of the Chinese yuan becoming the world reserve currency?
That, and he doesn't think so yet, but he's not 100% sure about that, but he doesn't think that's what's going to be.
If you've just tuned in, we're talking to David Gurwitz from Charles Nenner Research. David, what's happening with India?
Yeah, India looks good. We do a lot of business in India. We actually have an India product. We actually do once a week a whole India report on the Sensei, on the India currency, and on quite a few stocks, ICICI, Tata. We actually know India pretty well. It looks good long term.
I know that Nenner Research is calling for $2,500 gold. When is that going to happen?
A couple of years, not right away. I mean, we're on a buy signal now. We think gold's going to go up to December. We did call the top 3 years ago, and we've taken a couple of bounces. July begins the bottoming process. I mean, when I say last July. And it's been 2 or 3 bounces since then. We bought, we played a stock. We played Newmont, and that was a 10% move a couple of months ago, if you remember, and then we got out. Because that's what happens. You want them all to line up to really take a stronger position. We know the longer term's bottom, but the short term still hasn't. We think we've got to move up until December. 1,400 is a possible target, a little above, and then we're going to see where we're holding them, because it might get beat up one more time. And then we're going to really feel long term. It could even go past 2,500.
Do you see inflation or deflation ahead for us?
Both.
Different commodities?
Yes. Deflation first, which we're having, and inflation down the road in other areas. But overall, there's been deflation. You know, I mean, although you go to the store, try and buy food, it doesn't think like it's deflation, right? You know, but, you know, we think overall we've seen deflation. And Charles called, I'll tell you something, people should go to the site when crude was 147, if you remember. Everybody thought it was going crazy, and he got on CNBC and said we're going to have deflation, which no one was thinking about at the time, and crude went down 100 points over the next 6 months. And then since then, it's been up to the 100 range. We think crude, by the way, is going, which we went on a sell signal, which we called, despite the Mideast tensions and what's going on in the Ukraine, it went down. We think it's going to be into the high 70s, and then we're going to go long in November. We think possible target in the 110s. So something's going to happen to make it all of a sudden jump up. We don't know what it is.
Perhaps that perceived scuffle that could happen in the South China Sea between Japan and China?
Well, that's brewing. Hong Kong's brewing. Charles called war cycles about 4 years ago, and no one thought about it. And I'll tell all you listeners, I don't know how many people listen, but based on what I've seen, you have quite a nice listener base because you have a really nice show. If Google 100-year war cycle, and they'll see every second decade for the last 1,000 years in a century there's been a major war. 100 years ago was World War I, 200 years ago War of 1812, 1714, 1611, and it goes back. And so it seems like every 100 years there's a major war. We don't know why. So
you have another young generation that you're willing to sacrifice, maybe.
Well, or as some people say, the young generation doesn't learn from the past and goes and does the same dumb things they did 100 years ago. I don't know.
British Columbia is basing a lot of its future on liquefied natural gas. What do you see happening there?
Nat gas is a big Canadian thing. It used to be $12, if you remember. Went to $6. Everybody thought it was going back up. We started covering it about 4 years ago. We never really looked at it. And it's not an easy trade. You know, it's called the Widowmaker. I don't know if you know that's the nickname of nat gas by the traders, so it's not an easy trade. And we think long-term it goes back to 2. Even though we called it up to the mid-4 range, we think nat gas goes back to 2. Why, we don't know.
Worldwide fracking?
Well, I'll give you an example. A few years ago when it went down, we called it to 2 from 6, and it went there. The Canadian banks had loaned a lot of money to the Western Canadian nat gas producers, which you probably even know some of the companies because you're there. And the price came down $5.50, $5, $4.75, $4.25, and the loans they had made were at $6. So all of a sudden, like a house mortgage underwater, the corporate loans made for nat gas was underwater because they had loaned at a value of X. All of a sudden, it's 25% less. So the pressure inside the banks was enormous. And Canadian banks generally been pretty good with not messing up compared to us. So it went down to $4, $3.75, and all of a sudden there was forced selling to get their money back, and the nat gas price kept being driven down, and the reports in the paper said bank pressure forces prices down, and we knew that wasn't true. Cycles had topped, and that's what was driving it down, and then whatever happened, happened. You see what I'm saying? That's kind of how you can explain the cycle view, that the actual stuff happens after cycles tell you where it's got to go, and the stuff that happens drives it in that direction.
Do gold
I hope that makes sense.
Right, perfectly. Do gold and silver have their own particular cycles, and what do you see happening there?
They're similar, and they're both looking to go up. You know, silver was at $49 and came all the way down. We call that top, and so we're waiting right now. Although we said there'd be on a buy signal the other day, as long as you know there's a tight stop level, because we still see this beat up that's happening, but we still think it's good to go. That's why I say your readers should write and watch as we cover it, because we think it's going to go. Obviously, if we think gold's going to 2,500, crude's going back to, silver's going back to $50, it's got to go sometime, right? But now's the time to be looking to go. And then there's a move, like I said, into December, and there's a short-term top then, so we have to see whether we get out then.
Taking a look at other currencies besides the U.S. dollar, what do you see for the Canadian dollar, the euro, the yen, and the yuan?
The one, I don't know. We haven't covered it much, so I can't really say anything. I'll read you today's report in the euro. Short-term euro cycle's top. It's back in a sell signal. We think it'll hold above 124. From Europe's perspective, they need to have the euro at least 120. Otherwise, their business will get hit, and we do think it could go back towards par. I mean, so in the meantime, not yet. The Aussie we're looking to buy because it's close to a low. Again, the Aussie also we called from the high 60s to par, and is considered is your currency a commodity currency, so it gets affected by the crude prices. The Canadian, we wrote here, we still need to close above 111.25 in order to see regained Canadian strength. But the Canadian, basically, let me look in the last few days. What we've said is that the Canadian dollar, last week we saw another approach towards target of 115. This is close enough to, after giving a sell signal for the dollar. So it's in a trading range right now. And as far as the yen, we think the yen is a good short soon. So it's kind of a mess.
Yeah,
you know?
right. How does the Toronto stock market look?
The TSC, again, we called it from 12 to 14. I'm going to read you today's. Well, no, we did the TSC on Sunday. It reached a downside target of 13.9 and bounced a bit. It's still early to get back in, okay? Let me look at the chart. Also, your readers, if they write in, to write, they listen to me and you speak, Jim. And on October 19th, we actually sent out a TSX chart, which we normally don't do. I'm looking at it now. The downside is November. It looks like that's the bottom. And it is up a little and then up a lot into next year, the latter part of next year, which is what I said earlier. You're going to have a down move and an up move. And so that's what I think is going to happen with the TSX. But then it gets choppy the latter part at the end of next year and then down for a while. So, yeah, again, stay tuned because we cover it more short term, but I'm looking at the long-term chart now, and that's what we see. But we called it from 12 to 14, so something's showing up right in the system.
What do your charts tell you about the bond market?
Well, bonds have been up for 30 years because rates have been down for 30 years. And 4 years ago, Charles was begging people to lock in the 10-year at 4% and buy like crazy. And everyone kept saying, how much lower could it go? Obviously, it went a lot lower. We think bonds are sideways for 6 months, but longer term down because the 60-year cycle for rates, 60 years ago rates were kind of what they are now. 30 years ago they were high, and now they're low. So that's going to reverse, and we'll see a rise over the next 20 years. And you can kind of sense it with all the printing, and you know, we're kind of a tinderbox such that any auctions that don't go, people will eventually want to avoid the risk of lending. And Charles said one of the interesting things about the head of PIMCO gets out at a bond top. He's a market indicator.
What about Canadian and U.S. real estate?
Don't know. That's a good question. Real estate isn't so liquid, so we don't know how to look at it other than through some public vehicles. We don't think express the right term. One of the things Charles says, if you own real estate outright, let's say you have rental property, you have no debt. If the tenants get hurt, you're going to get less rent, but at least you got bricks. And at some point, that will come back. But it's, again, the next 5-6 years is not going to be so pretty. I mean, look, Los Angeles real estate has almost doubled in certain spots in the last 5 years. So it's, there was a lot of foreign money just pouring in, I think in Canada too. There's a lot of foreign money coming into the big cities. I know one of my clients is a big real estate guy in Denver, and just big clients are coming in with baskets of money from overseas. So we haven't seen that, but that's not our expertise to predict real estate.
Do you think Ebola could be a big risk to the North American economy?
Yes, because there's such a thing as infectious disease cycles, which we haven't really published, but Charles was talking about it years ago, that, there's a 50-year or 60-year cycle in that. Not that long ago, millions of people died of influenza. Wasn't that long ago. So there's no reason, according to the way cycles work, why it can't come back again. Maybe Ebola is a reflection of that.
Are there certain investment sectors that you should avoid right now?
Yes. Like being long nat gas, like I'm saying, bonds will be good, but long-term not. Stocks, while we think you'll have this run-up, I'm answering longer term, not just today. I assume your question is, longer term as well. Longer term, if you want to live through this up, down, up move with stocks, they'll be fine, but it's really better off to play it short and get out. I don't mean go short. Play a move up for a few months, get out or go short, and then go long again towards the end of the year, and then plan to be out of stocks for most of the rest of the decade. I mean, there'll be times to buy, because never everything goes straight down. But so that takes care of stocks and bonds. Gold and silver look good longer term. They look very good. So, crude we think is going to be a good thing soon. Grains, we wrote about today, are actually very near a buy signal. So actually most things are getting close to a buy signal, shorter or longer term at the moment.
Has this been a period where bargain hunters have been able to cruise through and take a look for some good bargains?
In what? In stocks?
Yes.
I don't know. I just know people on pullbacks buy. So that for sure. But in terms of bargains, it's pretty well priced according to us. Like I said, we have more to go on the stock move. Starting in a month or so up until the first quarter. So it's not over yet. But longer term, we think it is. You're not going to see much more than 5% above these prices.
I know high-tech stocks like Google or Apple really catch people's eyes, I think, because they're in the news a lot. Is that a good reason to buy them?
Well, look at Amazon. I don't know, Amazon's high-tech. It's certainly tech. Look at IBM. Look at these things. It's you're right. People, the news can, I think, obfuscate thinking. And a lot of times we're so addicted to it, we think we need input. Very often it's better to go relax, go take a walk in the woods, and think about bigger picture things, which is what we like to think the cycles give us.
At Charles Nenner Research, I have a feeling that you don't spend too much time watching the local news or the international news. You spend a lot more time taking a look at historical charts. Correct.
That's a very good observation, yeah, Jim. Because we don't think the news affects anything. That's
and you can be a lot more objective with your findings as well.
Exactly, which is why people like it. Especially, we have a lot of Canadians. I have, your area code. I speak to a lot of people because Canadians are like Indians tend to be more positive, longer term. Canadians have been very, gold and silver and oil and nat gas focused. But they enjoy the fact that we don't want their money. We just we get paid monthly for our advice. And secondly, we are able to give a 15-year projection based on the past rather than, this is what I think. A lot of times you look on these news shows, well, I think it's going, okay, what's your basis of your thought? Here we're giving a mathematical, scientific algorithm that shows us why. And we show it to you, and there's a fairly rigorous analysis that we do. Multiple different screens of analysis to come up with stuff, and we don't know why it works, which is nice. We don't get wedded to any particular mindset other than this one. So it's, we've got a very big business all over the world, and we love our Canadian clients and always want more. That's why I was so happy to be on your show.
David, could you maybe again mention your free trial offer right now?
Sure. 1 month free of the research that Charles Nenner Research publishes, which is based on what Charles wrote while he was at this small place called Goldman Sachs for 15 years, reporting to the head of global macro trading. You'll get to see what a report to Goldman looks like Monday, Wednesday, Friday, covering stocks, bonds, commodities, currencies, 3 lines, 4 lines in each item. Sunday, they get a set of charts that whatever we find interesting, that they can look and see where cycle tops and bottoms are, and it's for free for months. And then afterwards, we'll be in touch to talk about different subscription levels depending on what their needs are.
David, thanks a lot for being on This Week in Money.
Jim, great. I really appreciate it, and I really enjoyed it.
My guest has been David Gurwitz, Managing Director for Charles Nenner Research Center, and you can find their website at charlesnenner.com. After the break, Marin Katusa reports from the New Orleans Investment Conference on This Week in Money.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Marin Katusa, energy strategist at kcresearch.com. He's on the line from New Orleans, where he's attending the New Orleans Investment Conference. Welcome to This Week in Money, Marin.
My pleasure.
Tell me about the conference and what's the mood there?
Well, the mood is very savvy investors. Look, it's no secret that the junior resources have been in a bear market here for the last 3 years. But, for example, yesterday, the day started early at 7 in the morning, and Rick Rule and I gave a talk to a packed room that started at 8:45 at night and lasted till 10:15 at night. And these are investors that are very savvy, they're experienced, and they're really interested and, asking the tough questions. So you have a really informed investor, and the management teams that are here are very high quality. So it's been a great show so far.
I know I've been to shows like that, but sometimes there's a real buzz on the floor where people are excited and looking for new opportunities. Other times, very quiet, and you wonder, what's that going to tell us about the future of investment? What kind of people are there today?
Well, I've had lunch with a few big fund managers. There's a lot of funds that are looking to deploy capital in the sector. You have very high net worth individuals. But the buzz on the floor is more, wow, look at the value. Which stocks do we buy? Whereas in the past, it was more of a bull market where, people were expecting higher commodity prices. Right now, it's all about look at the value of these companies where they have twice the ounces in the ground that they had 3 years ago, but they're trading at, 75% less. So the buzz right now on the floor is, the value proposition of many of these junior resources.
Is there any one that really stands out?
Well, look, there's a few here that have really stood out that have high quality management team. And what my biggest takeaway of this show is when it's a, euphoria, let's say at the peak of 2007 or early 2011, these floors were so packed that you would never see the president of a major silver producer like First Majestic, Keith Neumeyer, walking down because he'd be with the big fund managers or the brokers in private meetings. Today I've seen major producers, the presidents of the company are walking down talking to retail investors. And that's the value proposition right now in the sector, where you got guys like Rick Rule accessible all day. And because they're not swamped in meetings and doing financings, you get really face-to-face time with the best in the business. So, it's been a great show for myself personally.
Should a person attending a conference like that have kind of a concise shopping list? Don't just wander around and then think you might find something, but actually have some goals, some targets.
Well, definitely. All of the companies, when you go to a show, they're pre-registered and you get to access who's going to be at the show. Have your list of questions. And the best part of this is you get to meet the presidents of the company face to face and do your due diligence and ask the tough questions to the company. That is the point of these shows, to get to know who you are investing in. And that is the most important aspect of junior resource speculation is people. You have to invest in the right people.
Marin, I know you have a book coming out very soon. Can you tell us the title?
Sure. The book's called The Colder War, and it's mainly about how Russia, under the leadership of Vladimir Putin, is reestablishing itself as a global superpower.
And, of course, we've seen the plays that he's made so far, and a whole book about that should be fascinating.
Well, we cover the history of the Middle East and also the Russian sector, and people don't realize that Russia's been the number 1 or 2 oil producer for the last 100 years in the world. They have about half of the world's global uranium resources. They have 25% of the conventional gas resources in the world. Russia is a resource powerhouse. And if you want to invest in the resource sector, you have to understand what Russia will be doing.
Marin, we'll be doing a whole show about it. Looking forward to talking to you about the book.
All right. Take care, Jim.
My guest has been Marin Katusa, energy strategist for kcresearch.com. After the break, Chris Marchese reports from the Spokane Silver Summit.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Chris Marchese, mining analyst for the Morgan Report, which you can find online at silver-investor.com. Chris is speaking to us from the Silver Summit in Spokane, Washington. Welcome to This Week in Money, Chris.
Oh, great to be with you again.
Chris, what kind of a atmosphere do you have there at the summit this year? I know attendance is down, but is it a very positive crowd?
Oh, it's very positive. These are the real believers in why you should own gold and silver as part of your portfolio. And actually, the attendance, as in, the audience and whatnot, isn't down very much from last year. The noticeable thing is there's much fewer vendors, probably about 40, 50% less, which, we could have expected because, all the exploration companies, they can't afford it, and so they're not here. So it's basically the larger companies.
What kind of things have they been discussing?
Should you own, what proportion of silver versus gold should you own? When's a good time to buy? And, all the speakers, and there's quite a few big names here, including David, said, this is just a fabulous opportunity at these prices. And, it's no one really debate that except, what you hear in the mainstream, or price targets set by, the likes of Goldman Sachs or other commercial banks who have vested interest in moving the price lower. But, it's pretty upbeat. The people I've talked to are just been buying and buying and buying.
David Morgan told me that they were going to be doing a presentation on medical silver, and I've heard that in Sierra Leone, they're using nano silver to help treat Ebola. They're getting positive results from it. Any talk about nano silver there?
Oh, yeah. We're actually sharing a booth with the gentleman. He is a great doctor. He's published several books. I think we're going to release that video. It was recorded in the public domain. And so I got a chance to talk to this guy one-on-one for about, an hour or so. And he has 5 medical degrees, and he found out that, did not, how should I put it, official drug trial, but in places in West Africa, hospitals that used his proprietary silver mist, you breathe it in, and it coats the outer layer of your throat, and it prevents the Ebola disease from getting Ebola from getting in and attaching to itself, and therefore getting infected. But I'll just summarize this. So in one clinic down there, everyone in the hospital used his things, his spray, his mist, and daily formula. And those that didn't take it both got infected with Ebola, and everyone else did not. That's not, technical clinical proof, but, you can derive your own answers from that or thinking from that.
Chris, I understand there's also chatter about the new book that's coming out about silver that you've worked on. Tell us about it.
Yeah, David Morgan actually held it up during his presentation. It's called The Silver Manifesto. David and I have been working on it for 6.5 months. You probably know better than I think I told you when we started, and it was quite a while ago. And, we've been done for a while, but it's all the small things that need to get done. We're going to self-publish it, and Sprott Inc. will likely, be a heavy marketer of it. And it should be in publication. I don't want to give an exact date, but within the next month. We'll list on Amazon on the usual outlets. And Eric Sprott is currently working on the forward. Then after that, it's just a matter of making everything is correct. Every single footnote, finishing the acknowledgments, and that type of thing.
Chris, thanks a lot for speaking to us from Spokane.
My pleasure.
My guest has been Chris Marchese, mining analyst for the Morgan Report, which you can find online at silver-investor.com. Thanks to our guests, Ross Clark, David Gurwitz, Marin Katusa, and Chris Marchese. And thank you for listening. I'm Jim Goddard. We're back next week with more This Week in Money.
This Week in Money is a production of Howe Street Media Incorporated.